Now check out this stock. It's called OKTA. It's cloud security company. There's going to be a lot of cloud security issues. The stock is on cheap right now. It's not doing that. I mean, it's not. What I'm trying to say is it didn't sell off, and it's still valuation-wise quite cheap. Security companies are going to be doing very well. The 5-year growth on this stock is 1,329%. Now, remember, when the economy picks up again, it doesn't mean these stocks will recede. It means they will go higher based on where they're at right now. The best stocks are those that are able to withstand the relative strength we're seeing. This stock is withstanding that relative strength. I'm looking at several other stocks, but this happens to be one of the strongest ones right now. It's got, let me see how many analysts are looking at this stock right now. Yeah, it's got 4. Yeah, there we go. How many, can you go a little lower? I want to see how many moderates it has and how many strong buys it has. Yeah, 10 strong buys. That means institutional accumulation is moving into this stock. So I like it aggressively. I like the stock quite a bit. Can you imagine, Craig, 5-year growth of 1,329%? It's crazy, huh?
Now, you said these are stocks that are likely to rebound quickly?
These are stocks that will either rebound quickly or stocks that are recession-proof, meaning these are stocks that do just as good or better when the economy goes crappy than they do when the economy is going well. Like car auction sites. They do well in good times because of one reason, and they do good in bad times for another reason. But they're always making money because people are always going to be buying cars during good times and bad times. How about the next one? GEO Group, ticker symbol GEO. The 3-year return, negative 51%. The company earned $25 million instead of $40 million a year ago in the first quarter.
Say that ticker again.
GEO. Notice how it's backing away from the 200-day line. So they're doing their forward guidance is horrific. Their 3-year return is negative 51%. This is before COVID-19, 3-year. They earned $25 million in the first quarter versus $40 million. And remember, the next 3 quarters are not getting better because all those restrictions that are lifting on the streets are not lifting in federal government. You can't do that. It's against law. They added a lot more expenses. They're adding a lot of personal protection, diagnostic testing, and medical expenses. And they're not getting more rent from the other branch of the federal government. In other words, they are sucking it right now. They are doing very, very, very bad. You guys like these stocks? Pretty good, right? I'm not seeing any light at the end of the tunnel here, okay? And again, they were doing really bad before this happened. So let me tell you why I don't like why I don't like Intel. We've seen, I'll give you the numbers, all right? We've seen a total of 1,055 institutional investors buy about 161 million shares. But they sold 206.9 million shares, the sellers. There's a net sell-off of about 45 million shares, which represents over 1% of the stock. Second, revenue for a year from now and 2 years from now, the forward-looking statements are not great. That's number 2. Number 3, they're no longer the leader in the process. They used to be a leader. Now Taiwan Semiconductor is a leader. And in terms of the quality of the chips, AMD is really gaining an edge. Even I'm starting to look at AMD chips. Don't ever tell my father. He puts computers together still as a hobby. He's been doing it for 40 years. Only Intel. He loves Intel. So they're not looking good. They've been lagging the last few quarters. Relative strength, AMD is doing better than they are. Do not like this stock. Do not like this stock. Now, is Intel going out of business? No, but I think it's going to start lagging behind. We're always used to seeing it as a leader. And I think those days are going to be shortened unless there's something new happening. Yeah, that's what I said, Ken. There's been a lot of insiders selling. Insiders. I'm sorry. I thought you meant hedge funds. Yes, there's been a lot of insiders selling Intel as well. Intel is not. Addy says, would selling covered calls a good way to get something more out of Intel than selling it today? Let me tell you the best way to get something out of it today. Buy AMD and sell Intel. Use ATR 10 days of volatility. Make a what does Jeff call it? Linked trade. I call them spread, linked trades. That's what I would do. Solar energy. Why do I like solar energy stocks? Because so far we haven't seen the pandemic cause any type of impact on their share prices. If you can believe that. It's crazy. So the first company is Enphase Energy, and I'll be talking quite a bit about this company in the future. Ticker symbol is ENPH. This is a leading microinverter company. Microinverter is what is needed to go from heat to energy. 25 million microconverters to date they have sold. 3 quarters back-to-back positive earnings surprises. The 3-year return on this stock is 8,175%. All right. The stock is doing very, very well. It's a small stock, and I believe this stock is going to surge because it's in the right place at the right time. We've seen solar power is now accounting for 40% of this country. 40%. And Ken, China and Germany are the second biggest markets. We're going to get into Germany and China in just a bit. So there's a very strong rising market in Germany and China for solar. Remember I was talking about Nino, that car, Chinese first, the Chinese Tesla just a few days ago. Nino, I think it was. So solar power is, Neo, thank you, Jill. Solar power is heating up, and it's not going anywhere. I've got 2 travel stocks for you, or stocks that are related to travel. Get a piece of pen, get a piece of paper, write this down. They're already seeing upside. So the first stock is PENN National Gaming, PEN. The second one, most of you will know, but the first one you probably won't. PENN, PENN National Gaming. They have 42 casinos and racetracks. They own the Tropicana property in Vegas and the Hollywood and the Ameristar brand. Now, what I like about this company is because they have 42 locations and they're all over the country, you don't have to travel too much to get to them. So if you want to gamble or you want to bet on horses, but you don't want to travel too far, this company will give you the ability to do that. They've got 7 strong buy recommendations, 80% year-over-year growth. Revenue growth over 5 years is 104%, which is about 50% better than the overall market cap. Technically, the stock is bouncing back. It has a $39 price target, and it's at $32. And notice that it has been sprucing up. I think the price is, can you go to a multi-year high? I want to see where we're at right now, comparatively. Yeah, we're almost there. We're coming out of this thing. Definitely. And again, this stock is just coming out. There should be a pullback, and then we should see more upside, because remember, these things are coming back, and cyclically speaking, the stock does very well in the summer months. That's when people do a lot of their fun expenses out of entertainment and holidays. Second stock, he already owns it. He's increased his ownership of this stock by a whopping percent in the last 2 quarters. It's Restoration Hardware, RH, ticker symbol RH. Get this, 2 years ago, they had 5.8 million in cash. They now have 47 million in cash in 1 year. In 1 year. Now, Mr. Earnings per share went from $7.80 to $11.66. That's a 49% increase. That's what Buffett looks at. He's increased his exposure by over 40% in the 3rd quarter of 2019. And I wouldn't be surprised if what we're seeing is his accumulation right now. Love this stock. Not only do I like the stock, it seems like Mr. Warren likes the stock too. And based on the price action we're seeing right now, it's not a bad. This stock is a unique stock because it's going to start seeing a lot of increase in market cap after this stay-home orders are no there. But to see it increase like this and stay above the 200-day moving average, that's telling me that there's somebody smart is buying this stock. And Warren already owns a good percentage of it. This is a good, strong company that has very good ratings behind it. And again, very few moving parts. If this stock doesn't rally, I don't know. This is a hot stock. 5.9. Very similar to Ring Central. You guys are familiar with Ring Central? Imagine Ring Central, but for business. All right. So very simple. They rent space. They go to REITs. They go to data-centric REITs, which I've talked about before, and they rent data centers to host communication software. And they provide software for workforce management. In other words, you guys want to do a call center, customer service center, a sales center. Ticker symbol is FIVN. FIVN. And Craig has it up right now. Get this. It has a 5-year price gain of 1,593%. So if you want to build a virtual call center and you don't want to buy 1,000 phones, and if you don't want to buy a big building and put people in there, if you have internet, if you have a headset, and you basically have their software, you have a call center. I could put 10,000 people on their software right now. All I need is a headset, and that's it. Internet and their software and a computer, and I'm in business. Actually, I don't even need their computer. That's the beautiful thing it is. You could have a company, and the biggest issue to starting a call center was getting an office and getting the people. Now you can hire people from all over the world, and they're on one network with this Five9. So it is huge. It's not going anywhere, and I'm liking it a lot. It's being in the right place at the right time for the next 5-6 years. It is a revolution if you think about it. Oh, by the way, I forgot to tell you, they just signed a contract with Zoom and AT&T to provide live agent support for both companies. So, Craig, I know you get really excited about talking to Zoom, but now you're going to be talking to them via Five9 agents. So, very, very big company doing, based on what I'm hearing and based on the data and based on the fact that the stock has huge influx in tech, in the tech that we're in right now. I would easily say that the stock could double in price. Easily. And I love this stock. I'm thinking of buying this stock, actually. It's called Electra Mechanica. Ticker symbol SOLO. They do micro electric cars. Can you imagine a micro Jeep, Craig? An electric micro Jeep. They're building their first U.S. assembly plant. They're opening retailers in Arizona and Oregon. And electric cars were heating up before COVID-19, and they're going to heat up after COVID-19. I'm looking at the stock going between $7 and $9 per share. Again, in the next 2 quarters. The next stock that I'm liking a lot, but again, I already told you about this stock. I gave you this stock about 2 months ago. From now on, I'm going to kind of give you reviews, but let's see how it's been doing since I've recommended it. TWLO, TWLO. You guys remember I gave you this stock a few months back? Told you that I loved it. Let's see how it's doing. So 3-year growth on the stock is 632%. 13 buy recommendations. Shares are up 90% year to date. But think about this. The market cap is about $25 billion. This stock, could be a huge takeover potential for a company like AMD or Cisco or Oracle. They have the leading, if you guys want a company that has the leading text alerts, global text alerts. I'm going to tell you something that you guys will be shocked to learn. Global text alerts in this day and age, not that common. US text alerts, very easy. When we were getting text alerts, it was very hard to find a company that did global text alerts. I'm not kidding. I had to go through about 6 companies. Even the ones that advertised were full of it. Twilio, 10 times cheaper, 10 times better, but don't be surprised if this stock gets taken over or continues to go from a mid-cap company to a large-cap company. Love this company. Next one. A sector that people have been ignoring, and it's coming back. I actually wrote an article. It's called Power Your Portfolio with Battery Stocks. Pretty good, huh? Power Your Portfolio, Battery Stocks. The first stock on my list is ALB, Albemarle, lithium mining stock. Are people playing video games more? Are people using laptops more? Are people, oh yeah. Is it going to go back to normal? Yes. And that's why we're finding stocks that one of the biggest factors is, unless you're looking for a turnaround or a special circumstance, is to find stocks that were doing good before this pandemic hit. So the stock is trading above the 200-day moving average. It has several analysts calling for a short-term price target of $95 a share. And remember, the energy markets are not doing well right now. And they're not going to be doing well for several months to come. That means battery, lithium stocks, and lithium is a commodity. This stock, this group should be moving higher. And it's also not on the radar of a lot of retail traders. But now it's on your radar. I like this stock. I like this stock quite a bit. I'd like to buy it a little closer to the 200-day line, but I do like this stock. Yeah, take a look at this thing. Not bad, right? It based out pretty well. It had a long congestion. I always like to see long congestions. Long congestions lead to powerful moves. These are stocks that could profit like tech, but they're not in the tech sector. You may see one of these two stocks or both of these two stocks in my next momentum factor pick. They're really good, strong stocks right now. I like to see what they're doing. And they're not really in tech, but they are a lot in the recovery phase. The first stock is Trade Desk, the Trade Desk, TTD, new highs. 3-year return, 589%. 5-year revenue, 1,384%. I'm going to say that again, 1,384%. Okay? What do? Very, very simple. They let's say you have a company like Wealth Press, and let's say you want to do advertisement on different channels, video, but you want to do it yourself. You don't want to go through an agency. It's a self-serving platform where you can buy advertisement space for yourself. So you don't have to go through an agency. And they now just partnered with TikTok, which is a hosted video platform. So it's a programmatic advertising platform. And now with COVID-19 market being bottomed out, people are spending more money on advertising like they used to again. So this company is expected to make a lot of upside. It's a very, very hot stock right now, and it's got a lot going for it. It is a very clear momentum stock. And this segment of self-serving advertisement, that's the future. Yahoo does it, Facebook does it, Twitter does it. So instead of going to an agency, you can just go to Trade Desk. You could see everywhere they go, and you could just do yourself. It's like Google. It's like the old days, but now this platform was reserved for advertisers. Very, very, very good stock. TTD ticker symbol, stock making highs. Online retailers are heating up again. Let me give you two of them right now. The first one I have not given you yet. The first one is called Farfetch. Ladies may know about this one more. If the guys are aware of this stock, I would be kind of surprised. If the ladies were surprised, I told my wife about it. She's like, I've been buying stuff on there for like 2 years. You're not going to surprise me. Again, ticker, they are an online retailer. They sell bags, jewelry, swimwear, trousers. It's a British company, all right? And the stock is obviously doing well. The market cap for this kind of industry is $300 billion. They are a $5 billion company right now, all right? So they have a long ways to go. They have 1,200 sellers right now and 2 million interactive customers. And they're growing at a 7% annual rate. Very, very hot stock, especially if this COVID-19 keeps going. And if not, once people start buying online, they never stop.
Yeah, oh yeah. Convenience.
Yeah, Bob, you can score brownie points on this one. Tell your wife about it and then buy the stock. Yeah, I like the stock a lot. So first stock, SolarEdge, ticker symbol SEDG. It's an Israeli company expanding into solar power. Stock is growing, 12-month gain 120% and 40% in 2020 alone. It's doing well, all right? Their 5-year revenue growth, 338%. 5-year earnings growth, 462%. Short-term price target, it's about 175 bucks, 170, 175 bucks. And right now it's at 135. So it still has some upside. And I like the pullback. I actually told Craig about it this morning when I was looking at it for the pullback. And again, it's a very, very strong stock because it's getting into battery modules it's getting into inverters, it's getting into battery modules, it's doing everything right. Now, I want to focus on a very specific electric vehicle ETF. The ticker symbol, CARS. This sucker is up 38% over the last 12 months. The S&P's up 12%, 39%. 39% versus 12%. Yeah, I liked it before and I like it even more now because, and I'll tell you why. A lot of people believe that this index has Tesla and Plug and a few others. This is a very diversified ETF. It has Toyota in it, it has Honda, it has Google in it, it has every company that has any exposure to electric cars now and in the future. Now, I want you guys to keep something in mind. Electric car sales are supposed to go up over the next 12 months, 36%. The rise in electric car sales. What percentage of market cap passenger cars make up right now in the world electric cars? What percentage do you think? If you had to put a percentage on it, what percent would you say? Ken says 5%. Bodine says 5%. Do we have anyone else? 80 says 2%. Jan says 2. So we got 2 people saying 5%. We got 2 people saying 2% and a few people. All right, let me tell you the actual number. It's 3%.
Yeah.
3%. The actual number is 3%. Now, we're expecting over the next few years, not only decade, few years, we expect that number to move up tenfold. So we're going from 3% to 30% in the next few years. In the next few years, not 10 years, literally a few years. Think about the market cap and how big the market cap is going to grow in the index, in this ETF, if the market cap is like 3% right now, and it's going to be 30% before 5 years is up. We're talking about growth of 40 to 50% per year annually compounded, okay? That's huge. That's huge, huge growth. So again, huge, huge. And when you look at the constituents it has, it's got a little bit of everything. So if you guys want to get into every company that has to do with electric cars, this is the only way to do it. Highly, highly, highly recommended. Now, as you guys all know, the energy stocks have been the weakest sector, okay? So, and energy prices have been going down. And last week I had 2 videos giving you 4 energy stocks going down. But to give you an example, a real example of what I'm talking about. And last but not least, thank you, Bodine, PSX, that we just took a big profit on. That's right. So yeah, and I think they have more to go, by the way. I think these stocks have more to go. And I think the market is going to, what do we make, about 40% on PSX, Craig?
Yeah.
Good, 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 good. So right now, here's what my suggestion is. My suggestion for you guys is to try to play the short side of the market the most. But here's what I'd like you guys to do. I want you stop focusing on the strongest stocks right now. Start focusing on the weakest stocks.